Hi, we're talking about Your Money Matters on NDTV Profit because we understand that your money matters. And I'd like to talk to you today about the pricing of your loans. That is the amount of money that you pay to the lender, the interest cost that you have to bear. You will be aware, of course, if you have a loan running, that the Reserve Bank of India recently cut interest rates by 25 basis points. Have you gotten in touch with your lender to find out when your interest rates are going to go down? What's the process if you are a new lender? And can you get a better deal? Can you shop for a better deal? We'll talk about all of that and more on today's episode. I'm joined today by Parijat Garg, who's a credit expert. Parijat, thanks so much for joining in and pleasure having you on the program. The first question is, how do you know when that reduction in interest rates will translate to you, and is it on all loans that this is applicable?
So first of all, thank you for having me here. And this is an important topic because rates have come down and we are hoping that in the near quarters, the RBI would further cut down the rates. For every borrower, this is important. So the new borrowers, of course, will get immediate benefit because they're going to get new loans at the lower rates. So for them, it is a no-brainer. But for the existing borrowers, it's a question about what is the nature of their loan structure. Is it a floating loan structure or is it a fixed interest rate? And therefore, even if the rates have come down, there will not be any impact on their EMIs or their interest repayments. But whereas the floating rates, because they are linked to some of the benchmarks, there could be an impact on the interest payouts. So let me take an example of home loan, which is usually one of the largest loans in our lives. Now for home loans, if you look at, if this rate comes down, and within floating, there are two constructs. One is MCLR based reference points, and the other one is EBLR, which is the external benchmark lending rates. Now, if the external benchmark is linked, then you would get the benefits immediately. But if it is internally benchmarked, then the difference could be dependent on the policy that a lender applies.
Okay, so let's delve a little deeper into some of these aspects. What Parijat was just talking about is the manner in which your loans are priced. And let's explain a couple of concepts to you. You heard about the EBLR and the MCLR. EBLR, as Parijat explained, is the external benchmark linked rate. The MCLR is the marginal cost of funds lending rate. Now, both of these are used to price your loan. Okay. Now, the rate of interest that you pay is what the bank decides. And this is usually based on a mechanism that they follow. The EBLR is what is followed for all new loans that are issued. The MCLR existed before. So all of the loans that were priced on the MCLR before continue to do so right now. And so it takes a little longer for the MCLR rated loans to see a pass-through of the increase or decrease in the interest rates. By the way, the MCLR replaced the base rate loan, which was felt at the time by the central bank that was not an effective way to transmit any changes in interest rates into the system. So first it went to MCLR and then MCLR transitioned to EBLR. That's context for you. Parijat, the question therefore is, if you are still on MCLR, how do you go about getting a change in the interest rates? Because now you want to do this as soon as possible.
So MCLR, as you rightly explained, is something which is internally decided by a lender. And one has to go and check what is the current MCLR that is applicable on one's own loan. And this could vary within the bank itself because my loan might be linked to MCLR, but there is what is called as a spread, which is beyond the MCLR, and that defines my applicable interest rate. Whereas, Alex, if you have taken the loan from the same lender, your applicable interest rate as of date could be slightly different. So therefore, one has to first understand where do we stand, approach the lender, and speak about this rate cut and understand when would this get into effect for your particular case. Now, if the delay is there, then you have one option of what is called as conversion. You can request your bank to convert your loan to a lower MCLR plus the spread rate, which could be, say, perhaps in your case, Alex, it might be, say, 8.5. In my case, it is 9. I can come down perhaps to 8.75 or 8.5, depending on how good my profile is. So that's one possibility that one can actually explore. The other possibility one can explore, like you were rightly explaining, is that can I shift from MCLR to EBLR regime? Now, that is something which is also available to the older borrowers, the pre-EBLR borrowers, who now can shift to the EBLR regime and can get benefit of this frequent reset as RBI reduces the interest rates. And this process is also called as conversion process.
Okay. And the EBLR, or the external benchmark linked rate, resets every month by my understanding. The MCLR in a large number of cases is 2 months. Is that broadly correct?
So EBLR, yes, it will get reset automatically every month. And the benefit to the borrower is also equivalent to the rate cut that RBI has announced. Sure. Now, in case of MCLR, the lender or the bank, NBFC in this case, would review their MCLR perhaps every month, but it may not get reset for every borrower linked to that particular lender. And that reset is based on my loan agreement, which could be once in 6 months, it could be once in a year. And therefore, the transmission, as you were explaining, Alex, would be delayed in case of MCLR, even though the bank may have revised their MCLR, it does not come into effect for my loan.
Okay, that's very important, therefore, to go and have a conversation. Don't assume that just because the Reserve Bank of India has cut interest rates, it will automatically translate to you, especially if you are on MCLR. Now, you mentioned conversion. I'm wondering if there are charges associated with conversion if you are going within the same bank. Let's first talk about within the same bank or lender. If you are going and asking for a conversion, is there a charge?
There is. Of course, there's a charge. So if you're converting from, so there are 3 types of conversion that comes in. One is that you are on fixed interest regime and you want to shift to floating. So that's the one kind of conversion. The second conversion is that you are on MCLR regime and you want to shift to EBLR regime. And the third one is that you are in MCLR regime at a higher interest rate. Now you want to come down to a lower interest rate. Now for each of these, the financing charges could be slightly different. Typically, they would range anywhere between 1,000 rupees to 5,000 rupees plus the GST.
Okay, 1,000. That's not a very large amount of money. You'd be saving a lot of money on interest rates, particularly when they're coming down. But do remember, of course, what Parijat explained is that it's beneficial for you if the reset happens faster when the rates are coming down. But when the rates are going up, a longer duration for the reset is actually beneficial, which is what a lot of people did experience when the rates were going up, Parijat.
But that is right.
But having said that,
22 to 23, when the rates went up by almost 2%,
yes,
anyone who was on repo rate linked rates,
yes,
they saw the impacts very quickly.
Yeah. But the context that we're in right now is when the interest rates are going down, and we're expecting there to be at least another interest rate cut. So you might want to start talking to your lender now. Let's talk about the options available for shopping for loans, right? Or shopping for a better rate. Often it is advisable for you to look at the landscape or the options available to you, just like when you go and buy out another product, right? Any other product. Oftentimes you'll get a better rate at different shops. Similarly, for banks as well, you can get a better rate elsewhere, possibly. So would you advise, Parijat, that people who have a significant tenor or number of years left on their bank loans, should they go out and also speak to other lenders?
They should, definitely. And it really depends on what is your current interest rate. For example, today the home loan interest rates could vary between, say, 8.25%, all the way up to 14-15%. If your loan today for your home is, say, upwards of 12%, then shopping definitely makes sense, because you want to evaluate and see what the other banks offer to you based on your profile. And it is possible that 3 years back, when you actually took your home loan, maybe the rates were higher, your profile was not as good. But today, maybe your income is better, your credit score is better, you have already proven that you are repaying on your home loan consistently, properly over last 3 years, and maybe your housing project is also complete. So all of those benefits could translate into lower interest rate to you. And when you do this shopping, then you can present your case holistically, almost afresh, and negotiate harder with the new lender and see how much benefit can you draw on your home loan.
And is the charge different when you are shifting from one lender to another?
So the process is almost similar between taking a fresh loan or shifting to a new lender. But the new lender now knows that your property has been in existence. You have been repaying on your home loan to the previous lender. So now those benefits are definitely translated into your processing fees. So what I have seen, that quite a few lenders give deep discounts on processing fees, which could be 0.25% to 0.5% of your loan amount. So that's a significant amount that one can save while shifting to another lender. And the benefit that one needs to calculate here while taking this decision is, what is the benefit that you're getting on the total interest outgo. So for example, if I'm shifting a 50 lakh rupee loan from lender 1 to lender 2, now my rates are going to come down from 9.5 to 8.5, then it could be a significant saving that I might get. So a small processing fee that I pay of, say, 25,000 rupees may not be as bad, because in the longer run, I'm going to save significant value. So the general thumb rule that I typically apply is that unless your interest rate is differing by more than 0.5%, then it may not make sense to do a transfer to another lender.
Okay, and the last aspect, and I want to very quickly run through it, is that if you have the option between reducing your EMI and reducing your tenor is always beneficial, because you would be paying an interest, or you would be repaying for a lower number of months and years, and so therefore the interest cost that you will bear is lower. And the last point that you made about the interest cost, deciding whether or not to shift, do remember, viewer, that you will be paying a large part of the interest in the first half of the loan, because that is the way that EMIs are constructed, and as a result of which it may not always be beneficial for you to shift towards the end of the loan period, and it would behoove you, it would benefit you to go out and look at some of the aspects of how these EMIs are constructed. Parijat, thanks so much for joining me on this conversation. It's been an absolute pleasure having you on the program.
Sure, thank you very much.